right. Good morning, everybody. Well, let's get going. Okay. So last night, kind of interesting action. We made a bit of a V bottom last night on what looked like it was going to be a relatively ugly pullback out of the Nasdaq and S&P. We were basically, we were really trading today's lows. We had a real snapback after at 3 p.m. And a monster reversal to close on the highs in the last hour of trade. So, it's counter from what we did on Monday. I believe on Monday, we were trading up 50, 60 points on the S&Ps, and we literally the last hour we gave everything up and some into the last hour. We did trade really well the last 2 days in the States on the back after the fact. So I think that is something to think about and really important. And maybe we're going to do the opposite of that today. So just keep that in mind. That could very much be a realistic scenario that we actually that could mark the top, in a converse fashion to what we did the other day. So the other thing that I'll throw out there is, we had another good data set yesterday. Jobless claims was solid. GDP was really good. The revisions were really good, and I think that to me. It's a big, it was a big set of data. So this is 2 points in a row. We had the durable goods orders the day before, then we had GDP and initial jobless claims yesterday, and that really just kind of kick-started things as well for the session. I think that really put the markets at a bit of peace, and you were able to see that the guys, starting to think that, okay, well, even though that China's soft, the U.S. is still firing, so let's just pile in here. And we see light sweet crude and Brent crude yesterday, massive reversals. I'll show you those in just a little bit. A lot of risk assets really started to go. We saw copper bounce hard off to the bottom, and a few of the others. So very much a positive data series after dropping well under 2% on the 10-year Treasury. We're back up to around 220. Been a huge reversal, and anytime that there's that kind of moves going around in some of those major asset classes, that's going to affect everything. Right, looking into Asia overnight, you can see here we're up across the board. Not any really huge moves except for the Nikkei. The yen really weakening back out. In fact, I think at about 2150, we're at about 61% fib retracement of that move from 24 down to about, I think it got to like 13 or 14. So maybe at 2150 might be a decent place to fade that dollar yen. But you can see here that outside of the Nikkei, we're basically up 1%, a modest bump up, a little bit of a consolidation, and we'll have to see how this continues to play out. But definitely another solid session out of the States and out of Asia to kind of maybe calm the nerves a little bit from what we saw a few days before that. All right, we got a lot of stocks going ex-div over the weekend. Just have a look at that list. I mean, there's consolidated CCOs there. We've got SGLs and MPTs. There's REIs there as well. But the others aren't all that bigger names. So just have a look there and see if you're going to be involved. Just take note of it, especially if you're going to trade any of those stocks today. In terms of market data today, we had jobless rate out of Japan. Tiny miss, in line on the CPI numbers there, and actually a touch hotter on the CPI ex fresh food there. We've got UK GDP at 10:30. We've got consumer confidence out of the Eurozone at 11. We've got CPI out of Germany at 2. And then we've got a couple data points out of the States this afternoon. Personal income, personal spending, and University of Michigan sentiment numbers. All right, let's get into the maps. Okay. First thing I want to have a look at here.
Where's the vodka?
Okay. Is.
Take it back.
Wait a minute. No, that doesn't look right. Sorry guys, let me redo this real quick. Right. Okay, here we go. Okay, so the first thing that we're going to look at this morning is the ALSI. So we talked about this, I think, yesterday or the day before session, and we actually spiked up there this morning nicely. There's some sort of resistance here, somewhere between, call it where we spiked up to this morning at 43,900 and 44,100, somewhere in there. It's a nice little risk range where I personally think maybe not a bad area to look to fade this thing off of. It's really hard to imagine. I'm just going to go from the height of that recent channel. So you can see we're right at 50% fib retracements as of the top end of where we got to this morning. Whether or not we can, how much more we can extend it to is a great question. I think if we do get up here closer to 61% fib retracements, I personally think it's a very, very good risk reward to short. Like I said, it's just hard to imagine that we just make an enormous reversal off of, after the panic and the fear that we saw. But we'll have to see how this plays out. But watch this morning and see if this morning's top potentially could prove a bit of an inflection point. Let's look at West Texas Intermediate. So this is light sweet crude here. Massive bounce. We've got about a 14%. Sorry about that. About 14% off the bottoms already from Monday's lows in light sweet and in Brent crude. You can see here it's kind of coming into resistance at 42, call it $43. So we're hanging around right at that resistance level at the moment. We're really going to need to see it pop up above where those previous lows were, I think, to really give us confirmation that we're going to rally off of these levels in light sweet. So watch this over the next couple sessions. If we can put in a little bit more of a bump up, I think then we could stretch the legs on the market rally here. I mean, we talked about this in the last couple morning calls. You're going to need to see oil continue to drift a little bit higher to take the pressure off of the high yield bond market in the States. That is a very, very big factor, is the oil price. So, I know it kind of goes counterintuitive, but the higher oil price is actually going to be better for the market, I believe. All right, let's move on. We're going to look at the U.S. 10-year Treasury yields now. So we're back up above resistance, where we really failed hard here. I think below about 212. 210, 212, which I think was quite a major level, which is right where the 200-day moving average is as well. We've gotten it back above that now. We've done this in the face of a lot of worry, and the U.S. data points have been really good. I mean, September, it was back down to 25% chance of a rate hike in September. Only 3 days ago, I think we're already all the way back up to like almost 40%. So, you got to factor that in. There still could be some more downside left. But there still could be a further pop in yields here if we get, more good data going into the weekend today. Right. The thing yesterday, the big theme was obviously the rally in the miners. Like I said, I don't normally do this, and I did it the other day, but I gotta give myself another pat on the back for yesterday. I mean, I showed two charts yesterday. I showed Anglos on a 10-year chart, double bottoming out potentially on a 10-year chart. I'm showing it from the closing levels yesterday. They only closed up 12 Rand higher than that yesterday, showing a 10% gain in London. I think that's not too shabby. I'll show you the other one that I was kind of trying to show. The data series didn't pull up correctly, but you can see here this is a Freeport-McMoRan chart that I was showing you on the double bounce yesterday. We rallied 28% yesterday on the session off of these lows. You can see here we closed up here around 10:30. Then Carl Icahn came out and said they had taken a big stake after hours. It rallied another 14% after hours. So it doesn't get much better than that. So I think it proved to us that these are very key levels in these stocks, and they are to be respected, especially if we get another test of them. I would also say that everything that we saw between the good data points, the reversals in the copper futures yesterday, the reversals out of oil over the last couple sessions, potentially we could have seen a short-term bottom in some of these mining stocks, because you had the two M&A deals on Monday and Tuesday. We also talked about that yesterday and how that could be influencing it. If you're short if you're sitting on a short in any of these shares, you got to be absolutely petrified. So I'll throw out what I think maybe my potential, the trade of the day I think could be is Kumba Iron Ore. I think there's a lot of shorts on this thing still. I think that this thing could potentially be the next one to squeeze. I am talking my book here a little bit because I took a rather large position over the last few sessions here. But you know, I think this thing's got to squeeze up to resistance at about 125-ish before before maybe it can resume its downside again. And that's the thing. You know, you had a 10% move out of Billies and Anglos yesterday. I think that we'll probably have a decent chance of a second day play there again today. You know, when these things start to squeeze, you guys saw it last week in the platinums and the gold shares. You know, they put in kind of probably 25% over a 2-day period, and that could very easily happen again today. So just keep that in mind. The other couple that I'll show here locally are Woolworths. I think Woolworths failed again yesterday on a very, very important level. We obviously know how big the 100 level is. What I like about this is it just hasn't been zigzagging back and forth over the 100 level. It failed here forever under 100. Then we traded for about 3.5 weeks above 100, and then once we failed it again, we stayed below it the whole time. Yesterday we opened at 100 and failed off of that from the beginning. That did that on earnings, not bad earnings, but you know, not legendary earnings. So I think you know, there could be a little bit more downside in this as well. And I think after the South African GDP print from a few sessions ago, you know, that the retailers and the banks and those sort of names could be under a little bit more pressure, especially if you start to see a sector rotation into some of the mining stocks. That could be a bit of a theme over the next couple of days, so just keep that in mind. Truworths as well. You can see Truworths here. Tried to break out yesterday, failed horribly. We went up well above 96. I think we traded in 97 and change, and then we just bombed out all the way to about $90. So definitely a big failure. Further cements this line in the sand of what is resistance here on Truworths. And until we get above that, then I think you can sell it at this level. Support maybe around short-term support, probably coming in somewhere here around, I don't know, $88, $90, somewhere in there.